Okay, it's January 4th. We're trading the New York session. It's January 4th, 2021. What we're going to do is break down this euro dollar trade here. This is, again, Monday, 4-hour time frame. What you're looking at right now, this is a 4-hour bar chart, euro dollar. So we're going to talk about this price action. Obviously, this is last week's high right here before the holidays closed up. And then we're getting another retest here. So I want to walk you through how I was able to short this and then pinpoint the entry on the point and figure chart, but also how we're able to confirm that what we're actually looking at is a pretty significant turning point here, incorporating volume and watching volume along the way up on these bars. So I'm going to switch between a 4-hour chart, which is what you're looking at here, and then the 1-hour chart. So let's go ahead and review, and we're going to stay here on the 4-hour chart right now. Again, last week's high sitting right up here at approximately 1.2309. This was on the 30th of December. So again, 4-hour chart. This is last week's high. This is just before the market closed for the holidays. So what we're looking at right now is the same time frame. This is the 4-hour chart. So I'll switch back to the other one. This is the same time frame. If you'll notice the patterns for the most part on the bar chart. And then this is the candlestick chart. Same basic pattern. We have this resistance level here. This was a critical level of resistance at some point. Last week we talked about it, and we were able to get some trades around and because of this overall range of consolidation. I'm looking at futures, euro futures, and I'm looking at the volume indicators. Notice the volume on that candle. Notice the volume on that candle. The spread itself is really starting to diminish. The range, I should say. Some people refer to it as the spread. Other times people will refer to it as the range, which is really the low to the high of that bar or that candle. So you'll notice that, again, it's a relatively small-bodied candle. The range is not very big at all, but we've got a lot of volume in there, meaning that there's a lot of effort to try to drive price higher, but it's just not going anywhere. This is a warning. This is an indicator. What we're going to do now is we're going to switch to the 1-hour chart. Okay, so now let's break this down one bar at a time as price approach this resistance level. So what we're going to do is we're going to take a look at volume. We're going to be looking for, and I refer to this as the footprint, right? We're trying to find out what's going on here. What's smart money doing? What are the inexperienced traders that are trading inside of consolidation doing? Who's trading at this time? And how can we identify, as price is reaching this level of resistance, is it likely to actually produce some kind of a turning point? First of all, again, we can see that it's last week's high. This is a 1-hour chart now. So let's go ahead and take a look at that first bar right here. So we've got bullish candles along the way. So this candle right here kind of tops out in the middle of this price swing here. And we can see that volume starts to pick back up again. And then on the next candle, we get another candle to analyze, which at that point, if we look at that particular candle right there, right here, the second candle after it starts to really break out of this little consolidation range, this candle right here shows a clear with an increase in volume. You can clearly see that. There's no mistaking between those two indicators. I mentioned that I've got a volume indicator right there in the middle, and then at the bottom I have that wave average. It's a volume average. So again, there's no mistaking that we see volume coming back into this move. Suggesting that supply has entered the market at this point. If volume is ultra high, meaning that it's a strong volume candle, which it looks like it is relative to the previous ones, but not overall if you look to the left. Again, you always want to look at the left. You want to look at the background. You want to be thinking in terms of what's going on to the right of the chart and the price action, but we want to see where price is coming from and what is the background. So it really isn't a very strong, ultra high volume bar or volume candle. That is a sign in itself. So this is showing signs of possible weakness, but again, supply coming in, meaning that we would expect a clear retest of that resistance before we start looking for signs of a turning point. This is not the candle that we want to immediately sell off of. Now, let's take the next one right up above it. Again, supply coming back in at this point. Again, another high volume bar. You can see down here with the volume average, we're actually getting a histogram bar that's showing a higher print than all of the rest of them. Now, this could be, again, a climactic action as it approaches this resistance level. It's not breaking out through the old high. So what we want to do, again, is look at the background. The previous bar was up on high volume. That's what we're looking at on this move here as it breaks out of this little range of consolidation. Each previous bar is up on high volume. Not necessarily ultra high volume. So again, you want to look carefully at the background. Do we have signs of strength or weakness? In this case, it would be, do we have signs of strength? After a period of rising prices, this could be the start of distribution by one or more professional groups, meaning the smart money. Is there, and the question is there an old top to the left, as that could be an area of absorption or absorption volume? So the next candle, we would expect at some point, whether it's the next one or the following one, 2 or 3, would be a bar down, a down bar closing near its lows, which would confirm the weakness. And here we start to see as it turns, making a clear test at that resistance from last week. Here it starts to turn and we see these candles, they're closing at the lows with more volume in it, confirming this reversal. At this point, this is the area that we're looking for. We clearly see a much better trade setup as price is at resistance or support. You hear me say that quite a bit. I would rather trade when price reaches a significant level of resistance or a significant level of support and then trade the reaction. Okay, so now that we've been able to confirm the top, we're using volume. Where do we get in? How long do we hold on to the trade? So this is why I use the point and figure. The point and figure is going to give me a very precise entry. And you hear me say this a lot, that without point and figure, very often it's really easy to start looking at some of these candlestick patterns, and you ultimately end up seeing, let's say this resistance level right here where I'm moving my cursor. This is last week's high. You can see that this morning, prior to this reversal, it ran right into last week's high, and it creates a really solidified level of resistance. There's no mistaking this. There isn't another X above that level, so there'd be no reason for me to take this trade higher. However, what typically happens, and this is something that I noticed when I started using point and figure years ago, when I look at a bar chart or a candlestick chart, very often you see a candle, let's say, move through resistance, and it looks like it's breaking to the upside, and you don't want to miss the trade, so you jump in. And then it turns out to be some kind of a head fake, and then before that candle closes, it ends up closing below resistance, and then the whole thing reverses in the opposite direction. Well, you don't want to be on the wrong side of something like that. So how do you prevent that? And point and figure is one of the ways that I prevent getting into those head fake moves, because again, clearly there is no change on this chart, and there's no temptation for me to go long or short until there's a change in volatility based on the way that I construct this chart. So constructing your chart is something that you really want to understand with point and figure. This is something that we spend a lot of time in my coaching course. I share exactly how I construct each one of these charts based on what I'm trading, whether it's Bitcoin, Forex, stocks, indices, commodities. There's different ways to construct the charts, and you need to be accurate with it so that you end up getting a trade that looks something like this. It clearly tells me when to get in or where to stay out. So again, it's very likely that looking at a candlestick chart, there may have been a wick or a candle that moved through that resistance level, but ultimately here on the point and figure, I would not have been tempted to go long at any time as it approached last week's high. Again, a very solidified, clear level of support right here. I'll go ahead and put my cursor and crosshairs. You can see it's running right through there, right through the 1.2289 area. My entry was the 1.2285 area. Now, I talked about this in the beginning of this presentation, that if I'm trading a new expected trend direction to the downside, if I'm trading, remember we step back and we look at the background. If it was in an uptrend last week, and I could clearly see the uptrend on the 4-hour chart, well, then I know that it's probably going to wave on the way down if it's going to unfold and develop a new trend to the downside, a new downtrend. So I want to take pieces of this along the way. Getting it at 85, a 20 pip target wouldn't be bad to use, meaning that from the entry of 85, well, I would trade it to 65 on the euro dollar. The euro dollar doesn't necessarily move as much as the pound dollar. It can, but not usually. So taking a 20 pip target wouldn't be a bad idea, or the psychological levels. And this is something that I talk about all of the time. If I'm trading in a new direction opposite of the overall trend, but I'm looking at a turning point and it clearly makes sense, I'm going to trade it to psychological levels like the 50, the 80, the 00, or the 20. And then I repeat the process over and over again. So getting in at 85, my first psychological level or target would be 50. And you'll notice right here on that bar, it goes down as low as 51. That's just the point and figure. If we go to the bar chart, you can see that the bar chart actually shows a low of 49. So it hit 50. So again, you want to be looking at both the point and figure and the bar chart side by side so that you can get accurate readings. But this is what's putting me into the trade, the point and figure. The point and figure is putting me into the trade. It's also telling me where to take profits. Now, as I mentioned in the beginning, if this is the beginning, if this is a top for the week, let's just say that for the rest of the week or the next few days, the start of the year, 2021, if we're going to look at a new possible downtrend, which seems possible at this point, we're going to get multiple opportunities to short this. We've already locked in profits here at 50, the psychological level, the 1.2250 area with an entry of 85. That's not a bad trade. At this point, we would set it at a break-even stop. If it continues and moves lower, the second half of our trade, well, we've got to take profit target based on the count. So the point and figure is also going to give me a count, which is, we can refer to it many times. I'll talk about it and refer to it as fuel in the tank. How far is price likely to go? This gives me a bigger count. We want to have a minimum count, which is our first target. And then we want to have the overall count based on what we see here on the point and figure, which is the final count, you could say. And if it continues to move down, we're going to get multiple opportunities to add to that count based on redistribution levels on the way down. So we're going to talk about that in just a moment. Where is my final count? It's much lower than what you see here on the screen, but we've already locked in profits. We want to lock in profits, even if it's only 20 or 30 pips, because we're still trading in the opposite direction. We don't know for sure just yet that this may not find a level of support, bounce, go back up and take out the highs, let's say on Tuesday or Wednesday. That is a possibility. So I want to trade conservatively. I want to trade cautiously. I want to lock in profits. And I realize that I'm trading in the opposite direction of the overall trend that I could see from last week. So again, point and figure gave me my entry. It gives me my targets. And it also gives me a much further target if this is likely to continue to trend lower. So we'll talk about that here in just a moment. Where is the final count?